Well, welcome to the Real Estate Happy Hour.
Here we are, Thursday, 4 o'clock again.
We're back.
We're back, so...
as we always are. What's this song for, man?
We got a little cheers.
Cheers. You came back from Boston, huh?
Sometimes you just want to go where everybody knows your name.
Hey, that's right.
And they're always glad you came. It's kind of like here every morning when I walk in.
Every morning they hand you a beer.
No, that would be a problem.
That'd be awesome, man. But how was Boston,
Yeah, Boston
man?
was great. I went to the actual, the original site.
The Bull and the...
Bull and Finch pub.
Bull and Finch, yeah.
And it's funny because we went to one that was on, it was in another part of town. I guess they cloned it or something. But we went to the original one, which was very cool. And went to the Cheers pub.
Did you see Norm?
Norm was there.
Norm, that's right.
Yeah, a lot of them there. A lot of the cutouts were there.
Now, what about World Series? Did you get to catch any of that?
No, but I tell you, it's Boston was very cool. Went up to see Taylor, obviously.
Your daughter?
Yeah, she's doing really good. She's at Boston University, and she's doing amazing up there. She's got a lot of good things going on, and toured around the school. Right next, her dorm is right next to Fenway.
Really?
Yeah, which was amazing. So
I assume you got to partake in like getting a cold beer and all that at the
bar.
bar.
Oh no, which I suggested that, but I think
would y'all shop?
I was overruled there.
Would y'all go shopping?
No, we were walking around.
Oh, okay.
Yeah, we were just cruising
Great
around.
Great town though, man.
Yeah,
isn't it?
It was awesome. It's one of the oldest cities, founded in 1630. Boston is, and Boston Common was the first public park. And,
really?
Yeah.
Is that area down by the university or the university?
No, it's actually
Harvard.
No, it was actually more in the city of Boston, and then a little further west is actually where the schools are: Harvard, MIT, Boston University, and things like that. But Boston Common was right next to the Bull and Finch pub,
which is where they did Cheers from. Yeah,
man, I tell you, the fattest squirrels I've ever seen were in Boston Common.
Oh, I guess that I've seen them on TV.
I mean, they're old and overweight.
And
they're
what about
doing
the
well.
Pigeons? I assume, right?
They're doing
it's
well.
Exciting talk about pigeons. Let me tell you.
But so yeah, Boston University right next to Fenway Park, very cool. The Red Sox in the World Series right now, up 2-0. So that was very cool. We did a lot of public transportation. The subway is called the Tremont Street Subway, the T, and we rode it almost every day. And I was amazed at the engineering and how old this thing is.
If I remember right, it's the oldest subway in America, right?
It is. It is the oldest. It was the first subway system, 1897.
Man, that 1897 subway.
Yeah.
And I remember it was just a huge deal back then. Well, not that I remember then.
But it's just crazy how it's everything's built underground, obviously. And I was amazed at how many feet do you think are between the top of the subway and the rest of the city? I don't even know.
So you asked, hey Tara.
Yeah, so I asked you a question I don't know the answer to.
Yeah, you asked that question and you don't know, huh?
No, don't know.
All right, well.
But so sitting with Brady yesterday, speaking about the subways.
Yep.
He brought up one of our current visionaries, Elon Musk.
Now this is his 14-year-old.
Yeah, 15.
15, sorry.
Elon Musk right now is
CEO of Tesla.
Yeah, CEO of Tesla, also SpaceX. All right, the guy created electric cars. Nobody thought he could. He's taken trips to the moon. Nobody thought he could.
We hadn't yet. Let's be clear. He hadn't gone to the moon yet.
He hasn't yet, but he's been testing rockets.
Yeah, that's right.
SpaceX company. Right now, currently has a permit for a 2.7-mile tunnel under Los Angeles.
Yeah, who gives any individual or business, really, without it being a municipal project, the ability just to bore right under a city?
Yeah, and the name of it is the Boring Company.
Hey.
Yeah. And it's just amazing to think that he's going underground and just cutting a tunnel underneath the city.
Yeah.
Amazing the infrastructure that you would have.
This is Los Angeles, not Boston, to be clear.
And his vision includes 60 miles of tunnel, which would be one of the largest subway networks in the U.S. Another thing I found very interesting, other cities have cited costs of $1 billion per mile.
$1 billion per mile.
A subway.
Well, he's never worried about money. He seems to get it wherever he goes. And I'm with Tara. Wouldn't you love to be in an earthquake on that thing?
Yeah.
But you'd be there quick.
Yeah. How could you... How could you offset the effects of an earthquake on an underground tunnel?
Oh, well, he'll say he can.
Yeah.
Well, you know, one of the master marketings of Elon. Do you remember when those kids got stuck in Thailand?
Yeah.
I love it. He's like, you know what? I got a boring company. We'll just come over and get the kids out. I'm not so sure he really could, but what marketing skills, right? He's like, oh, he's like Trump. He's going to put himself in the middle of any story, right?
Yeah, and he's built Tesla up as this electric car company, and still is the only major, seems like the only major player in the electric car business, right?
That's doing a luxury brand that's and they're all banking on his technology. Let's face it.
Yeah, and we have talked about on this show before. We've talked about now he's got this individual that's paid or gone kind of invested with him to take a group of people in 2021, I believe. To space.
Yeah.
So the guy's traveling space. He's got electric cars now. He's cutting tunnels underneath Los Angeles.
By the way, did you see the stock today up 5%? I mean, so he's getting the last laugh since he got in trouble.
Yeah, no, I was actually looking at that Tesla stock today. I'm not sure what I feel about it because at the end of the day, it's a car company.
Well,
right?
Well, yeah, but with a backlog, Ford does not have 400,000 people waiting to buy their car and have put down money to buy said car at some point in the future.
Yeah, I just don't.
You don't have that problem with the Ford Escort.
But
you know what I
right
mean?
now, Tesla has the hype, and you know, once that goes away,
well, you're right.
There's nothing else to push the stock up. Is my point.
Hey, Jessica, how are you, Jessica? I'm sure you may not have been the person though to win that Mega Millions jackpot, but man, did you see this? This guy?
Speaking of money,
yeah. How much did this guy?
$1.6 billion jackpot on the Mega Millions. 1.6 billion. The first time I've ever seen a billion on the jackpot.
I mean, geez Louise.
Now, we did buy some tickets in Boston.
Well, you did, and so did a lot of people. Because to get here, obviously, they don't just give away the whole pot. They basically are splitting it, I believe.
And the sad part, I think I read something that said most of the ticket sales come from lower income households.
Well, of course it does. What do you think? It's like only in Alabama do we have a casino-type atmosphere with games of chance that are awful odds. Right. Oh, we'll play a game. Now, who do they think is going to play the game, right?
Yeah.
Ridiculous. But on this deal, what was staggering, some statistics for you, because you know we love stats on this show. The lump sum payment, $905 million.
Yeah.
If they do it. But, of course, Uncle Sam's coming.
Uncle Sam's going to take, what, about half of that? So if you take the 905.
Well, specifically, we know it's $330 million of that.
And then the state of South Carolina, where the ticket was bought, another $50 million. So just leaving just a paltry.
I mean, I don't know what the guy's going to do.
$525 million, right?
Yeah. And under South Carolina law, we may never know who it was that won.
Now they must have this jackpot figured based because they're only taking $905 million. They bumped the jackpot up because to spread it out. So where's the other? Where's the other 700?
Well, that is if you take the lump sum. If you take the annuity over the linked time, your payout will be $50 million. I think I'm taking the $50 million over 30 years.
$50 million 30 years now. But think about this: if you left with $525 million after taking the lump sum, and you invested that at 10%, you're making what?
Yeah, well,
I'm still making the $53 million, right?
Yeah, and you know one thing I didn't know, because I had to really look this up, was looking to see what happened if I died. You know, and I thought maybe, hey, it's a great benefit. The state's like, yes, they're 90, they're about to die. But no, the heirs do get it over the 30 years. But the problem is they're saying the annuity actually is the better way only because of human nature.
Yeah, but leaning towards that question, though, you know, as far as the money going somewhere, where does all of that... There's $330 million going to the IRS. $330 million. Where does that go?
Hey, you know what? I'd allocate another $31 million for Gus Malzahn to be kicked out, but that's just me.
Now I saw an email to somebody else. If they won it, they would have paid the buyout as well. So that's a hot topic.
Well, like he said, Nigerian lawyers are always available to help.
Always available.
Yes.
But think about it. We get these huge jackpots. Well, minimum 3 to 5 times a year. So you got these huge payouts to the IRS. I mean, they are they're making billions off of lottery ticket or lottery earnings, right? Lottery winners.
Right, and the big question that the terrorists, right? But she's talking about the Gus bus being on fire, and it is.
Gus.
No, but talking about the states and what are they doing with this money that they get off these lotteries? The Wall Street Journal did a study, and they really looked at it and said most of the time, most of the states have it earmarked, as they say, for education. So they went and they looked and said they followed the money over a number of years, and because of course they expected it to be.
That's how they sold it originally. Saying, well, we're gonna
education lottery.
Yeah,
right. And so when they went and they looked, what they found was that, well, while still earmarked for education, it got put into education, and then basically, what do they call that? Money laundering. For you and I, it would be money laundering.
Yeah.
But for the government, it's not money laundering. Yeah. They laundered it through education, then pushed it back to the general budget.
Yeah, they just
and said they had overpaid the education fund.
So it's not going where we thought it was.
No, in Georgia it is, because I mean, as you were telling me, you were the beneficiary of.
Oh yeah, I got some Hope Grant money, and I don't know how much grant money comes from state lotteries and things like that. Hopefully, some of it.
Well,
does,
Georgia does. I mean, for sure. But the funny thing is that they sell it. I mean, being the tax hater that I am, because I haven't met a tax that I didn't hate. What really drives me nuts are these sales taxes, all these taxes they put out there, and then they say, oh, this is for the road, or this is for this is for this new freeway. 10 years go by. They never take the tax away, right? They just start spending it on other stuff.
And that's ridiculous. One of those things you can't control, but it's still better than living in Honduras or other,
Yeah, speaking of that, trains are coming.
Yeah.
Right? And, that's going to be interesting too, isn't it? What's going to happen down there?
Well, yeah, and I think, that's just government in general. I mean, that's part of living in the United States is you deal with taxes, you deal with the government.
Taxes stink. But anyway, by the way, the convenience store that sold that ticket, $50,000 to them.
That's not bad.
I like that if I'm a convenience store guy, because everybody can be a winner.
Everybody wins, right?
Right. I got my odds are far better.
Yes.
Because everybody's buying. But by the way, in case you're wondering, for the next time you go out there, what were the odds of winning this? 1 in 302 million.
Yeah, and it's interesting to think about. I mean, anytime you throw a jackpot number up there, you're thinking, well, what would I do with that money, or what would you do? And I mean, I can only imagine the type of issues that you would have with family members coming out of the woodwork wanting handouts.
Imagine if you're as famous as Tara Lindbergh is, right? Every Lindbergh in America would be coming out saying, hey, we cousins.
Oh, of course. So, I mean, it creates a ton of issues. How to manage the money, the pressure, I guess the pressure that would come along with.
Well, that's why they said this South Carolina law that does not make you disclose who they are, because one of the last big winners was murdered. And I forget the state, but basically what happened was he had an address that was publicly accessible because, he's broke Joe one day. So, hey, whitepages.com had his address. He didn't care who knew because you weren't going to steal anything from him.
Yeah.
But all of a sudden he's got $500 million, and guess what? Joe ends up dead.
Absolutely. I mean,
I don't know what they expected. Did they expect, really, did the robbers expect him to have like $500 million just sitting in a can?
Yeah, sitting in cash.
I mean, it really doesn't make any sense.
Just hanging out in the guest bedroom.
Yeah. Now, what would you buy? Nate, what's one thing you would buy, definitely?
Oh, man.
Because I know you wouldn't show up here, no offense.
I have thought about it. I mean, I think I would probably just cut off about, maybe $500,000, and then just take a year and think about the rest. Don't buy anything huge at first. Take some money, just take some money off the top.
Blow it?
No, and just enjoy 1 year, and just don't touch the rest of it and think about it.
It's easier said than done.
Yeah,
I have
really,
a feeling. I'm just telling you, mine would include a yacht, renting.
Sure.
I'm telling you, sayonara real estate.
You'd probably rent one though, huh?
Yeah, I would rent one because I don't want to have that overhead.
Yeah. Well,
I don't lose the cheap factor here,
Yeah.
And Amanda would buy every pair of black shoes she could ever find. I'm making her sound every week like she's Imelda Marcos, but if anybody doesn't remember, that's an old 80s thing where the lady had every shoe. But anyway, a lot of them died of these previous winners. uncontrolled spending, obviously. I thought it was funny that you do pay, because they're all taking it up front, and they do withhold some, but then they all of a sudden forget to pay their taxes. Now, they're paying taxes on money they've already got. Where in the world did money go? That you could have all that money, and you forgot to pay taxes.
And the majority of people probably going from not having much saved, living paycheck to paycheck, to mega millions. And
one thing that you may be wondering is, well, they'll just pay all that. The taxes will be paid out of that lump sum. But the problem is, when you're as rich as these people are, the interest that this is spawning is more than our yearly salaries.
Yeah,
right. So they're having to pay real taxes on real interest.
Yeah, only 5% interest on $500 million is $25 million. $25 million a year. 20, 30 million just in interest.
Yeah, man, they're making fun of your shirt.
All right.
Yeah, he got the message, I guess, right? But I told you to wear a different one.
Yeah. Oh, well.
Anyway, moving on to the next topic, talking back into real estate here, talking about 3 reasons, because you remember we're in a seller's market right now where the sellers have been in control, but we get asked often because, so-and-so may have found their dream home, whatever it may be. They're ready to buy a house now, but they kind of want to sell, but I want that home. And so these are 3 reasons to buy a house before you sell.
Yeah, and this situation happens a lot, and it gets tougher. We were talking about it earlier today. It really hasn't been a problem in the past because when you sell your home, there's typically plenty of inventory on the market for you to go out and find something else. But that's not been the case now, and we see it a lot of times. So basically, the first problem we're looking at is qualifying.
Well, you have cash. If you're like Howard Cannon, you just pay cash for $1 million house.
Yeah, because you got your first home free and clear, and then you just go pay cash for another one.
Yeah, just keep buying.
And then you don't have to qualify, do you?
No. You don't have to qualify.
There's nobody calculating.
These mortgage guys love that.
Nobody's calculating your debt to income on cash.
Yeah. No, you are.
Yeah, we don't care. But,
that's right.
the biggest thing we talk about is just qualifying with all the mortgage payments. So if you're going to sell the house, and a lot of people don't understand. They're like, I'm still selling the house. Why do I have to?
Yeah, I've had that conversation in our house. But we're selling. We're going to David, say, to get a mortgage on a new house, and this may be a conversation we may or may not have ever had. But David knows we're going to sell, right? And it'll sell quick. So we're just buy the new house.
Yeah, don't worry about it.
And he said we have 45 days.
I'll write a letter that says I'm selling it.
And we don't have to pay for a mortgage for 45 days.
Yeah.
No pressure.
Yeah. So unfortunately, though, we do have to look at that. That's the biggest thing that we look at is we're going to count the current mortgage payment against you, obviously, that you're currently making, and then we have to add on the new mortgage payment.
And are we talking 45% debt-to-income ratios right now?
Yeah, and there has been some changes recently that they're going to be looking a little bit harder at the 45%, along with other risk.
Now, give us an example of that.
The other risk would be a low credit score or no reserves in the bank, limited amount of credit, things like that. So that high DTI is going to change
when y'all are talking about reserves, are y'all talking about easily accessible, or can I count my 401k?
You can count the 401k because you can access that to help you. Basically, we're looking at what happens if things get bad, or do you have anywhere to go to help you? Let's say you lose your job.
Okay.
And you've got a few months where you're looking for another job, right? Do you have a 401k that you can go take money out of and pay your bills?
Yeah, sure.
Then that would count, obviously.
Okay, so that's the money we're talking about. Now, where are you seeing most people are getting in trouble relative to reserves? Because it seems to me that if you're thinking of buying another house, you darn well better have some reserves, or you have no business.
Well, a lot of times, some people run into the problem of not having the down payment on the new house.
Oh yeah, well,
so
they've
got that money sitting in the house that they haven't sold, right, or that they're wanting to sell.
Right.
And so we want to go buy this house, but we've got to put money down on it. They can qualify for the payments, but we got to get the cash. We got to pull the cash out of the house and get it to the closing table, right?
Oh, absolutely. So can we do that? Hey, Darren James, what's happening?
Yes. Hey, buddy. We certainly have some options to look at, which would be typically is going to be an equity line that we have a local bank.
Do y'all
set
have
up.
a problem? Do y'all have a problem with that, knowing that it's coming out of the other house?
No. Now,
well,
typically any borrowed funds are going to be a problem for your down payment, but when they're coming out of the house that you already own, it's actually, that's an asset that you own. That's it.
Because y'all know it's pretty secure. You know there's a good chance
Absolutely.
of money's coming out, obviously, on that. So,
Well, because the bank issuing the equity line is going to limit what you can take out. Usually it's going to be around 90%. Maybe some can stretch up to 95%, but they're basing that off an appraisal, and then they're backing that off of, the current mortgage, the difference between that 90 to 95% and the current mortgage you own. They'll give you access to that amount of money. We can take that and put that down on
Right.
the new house.
interesting.
And then we're adding that equity line payment as well.
Gotcha.
To your
Oh,
debts.
okay. So now you got that new. So we're adding that to it. So you're just hoping they're rich. Now talk.
Or financially responsible.
Well, that's right.
Yeah.
Now talk about the term we hear often is a bridge loan.
Yeah, that's exactly what we just talked about with the equity line. It's some people don't technically call it a bridge loan anymore. Some people do.
Because there was a real
it is
bridge
kind of a
loan,
bridge.
right?
Yeah. So, but it is kind of bridging the gap between when you buy the new house and when your old house sells.
And tell me a little bit about why often when I come to you as a mortgage lender, oftentimes, y'all say, hey, we need you to go to one of the big banks, the big monster megas, and get an equity line. Why not? Why do some lenders not do equity lines?
It's just a different type of loan. Obviously a first mortgage is a little bit more of a traditional longer term mortgage loan. An equity line is a little bit closer to a shorter term consumer loan.
Are they portfolioed by these banks?
A lot of times they are.
They're not going to be insured by Fannie Mae, Freddie Mac, all those guys.
Yeah, a lot of times they're
Gotcha.
going to be held by the bank. So it's just a different loan. Many times it's going to be an adjustable rate.
We've talked about rates.
Yeah, absolutely. So the terms are going to be a little bit different on that equity line. That's why a lot of local banks would specialize in that. And us being a mortgage company, we only extend the first mortgage.
Gotcha. It helps y'all because you do so many first, not get into, I guess, trouble with the feds.
Yeah, most of the time those second equity lines and things like that are going to be depository institutions that have savings and checking accounts, credit cards, things like that.
Gotcha. Well, here are the three reasons I should say why people may do it. And the first one is it's a seller's market like it is now.
That's true. And speaking of that, I mean, it's, we kind of mentioned it earlier on. It's just sometimes it gets hard. You put your house on the market, it sells quickly, you find a buyer for your house, and you just don't like what's out there.
Well, it's happening all the time in this market for people.
Yeah. So if you're in a situation where you can't afford to buy the house before you sell your other one, we have this happen all the time. They have to sell their house first to qualify for the new house. You get the current house sold, and then you go shopping.
Well, right. Well,
and you can't find what you like, right?
Well, and that's the beauty of someone that wants to do it. They can actually have confidence if they price it right, have it in good condition, that they'll sell fast. So you've eliminated that.
Yeah.
That piece, which is really a big risk if you do it the other way. Now, there is risk, right? I mean, you get in there and something extraordinary force, who knows, war, it can be anything that comes into the market and just shuts our markets down, essentially. Where people, like right now, we don't have any inventory very much. And so we got to be real careful when you do this, that you may be stuck with two payments, so. And the other.
Now, if you get in a situation where you're carrying both mortgages, yeah.
Well,
yeah.
And I think it's really important for you to remember that so few sellers in this market are going to allow you to take a contingent offer. In other words, contingent upon the sale of a house. Why are they not taking contingent offers? They're not taking contingent offers because, well, they don't have to, right? There's going to be an offer right behind it, and why take that risk and tie up their house? You're going to the biggest issue here and thing to remember is that you're going to be selling at a higher price, but you're also going to be buying at a higher price, right?
Yes, exactly. Because you still got the the market that you're dealing with. I think it's interesting to bring up, though, if you do end up selling your house before you find a new one, all the issues you got there with finding a storage unit. You might have, you're moving your things more than one time. You've got temporary housing. I'm talking to somebody right now that's had their credit pulled for a storage unit. They had their credit pulled for the corporate housing.
You were telling me about this. Yeah. This is crazy. I never knew it was, we knew, but
you just got all these things that you have to do because they were unable to find a house before their other one sold.
The next one is really intriguing, is that the deal is too good to wait. In other words, I'm ready to look for another house. Oh, lo and behold, Fred and Susie are getting divorced, and I've been eyeing Susie's house for years, right?
Yeah.
And they're going to put it on the market, but I have a chance because I know Susie, and she'll give me first dibs if I want it.
Yeah.
And, it could be the other reason somebody needs to pay off a gambling debt. Who knows? I mean, what it may be, taxes, anything. People come from all different scenarios, and are you ready for that? And that's another reason why you may be okay buying it in this market, because the deal is that good. In other words, remember up here, we were at the first one when we were talking about the seller's market. We were talking about the height of the market, that the sellers are getting as much as they possibly can for the house. In this case, maybe they're not. It's a really good deal, and you're actually saving money by doing it. In other words, you're going to be selling into a high market and buying in a high market, but at a low price.
Absolutely, yeah. If you can get those terms, that would be definitely something to look into, and maybe a reason to stretch because you're getting a great deal.
Well, this is the one that catches most people that are thinking about doing this, and it's your dream home. I can't live without it. Oh, my God almighty. Lord have mercy, this is my house.
And that's what drives all poor financial decisions, right?
Absolutely. Did y'all not pay the bill around here? There we go. We got the lights back on. They have a motion detector here. Anyway, it drives everything. I mean, if I go into a car lot, all of a sudden I need a car.
Yeah,
right?
Of course.
Because this one has whatever.
And as soon as you fall in love with it, that extra $5,000 or $10,000 is not a big deal.
No.
But when you left the house, you didn't want to spend that money.
I have no car payment, but look, $1,000 a month, who cares?
Yeah,
it smells good.
Oh, yeah, you love it. It's fast. So the emotional decision is not rational. It's not a rational economic decision. It's maybe not a good financial decision, but if it's your dream home, right, you do it anyway, huh?
Yeah. I mean, people tend to fixate on certain things, don't they? I mean, and so they want a house in a certain neighborhood. I mean, we see it over in Edgewood of Homewood, Alabama here, right? It's the old historic homes. They're not very big. And, which everybody conventional wisdom's gone bigger, but these are tiny 3-bedroom, 1-bath house. But there's something about an emotional draw that all of a sudden it becomes a rational decision in your head. And then what's funny we see is that here comes Dad, the old man, the grandpa, going, where's the rest of the house?
Yeah.
Right? Because it's an irrational decision, because you can go a mile down the road and get you a nice, 3,000 square foot house for the same price. Mm-hmm. So, very irrational here but now, if it is your dream home, by all means, do what you want to do.
Yeah, take advantage of it.
Let your freak flag fly.
There you go.
Know what I mean?
There you go. But if you're finding your dream home, that's maybe a rare occasion, obviously, to find your dream home. So,
well, the other thing too, David, is certainly there are certain people where money is no object, and those people are just gonna do what they want to do, right? Yeah. And so it's not gonna matter. And it's not emotional to them either.
Well, maybe some of those people will be like Cannon and paying cash, huh?
Yeah, that's right. Absolutely. Well, moving on to the next topic, we are talking about single-family homes, the buying power of a single-family home over a traditional condominium.
Yeah, well, I had this question come up this week, and I just thought it was interesting to look at, because condos, anytime we hear condos, it's a little bit of a different animal. Just because of the way they're handled and the way they're looked at. But what we're talking about today specifically is that condo association fee. Let's say it's upwards of $300 a month in some places,
and
right?
it provides services. Let's remember that.
Yeah. Let's talk about what kind of services would that cover?
Well, most of your condominium association fees will cover certain things like trash pickup, pest control, water, sewer.
A lot of them have pools.
Water, sewer.
It's going to cover trash. Yeah. We talked about that, but
let's try to think cable sometimes, right? Basic cable. But the problem with anywhere you find one with cable, because we manage a few associations, is, and part of the reason is they can only get one line into the or whatever into the complex. So, but you have to, you're stuck with whatever deal they've gotten you. In there, anything above that, you're going to have to buy an entirely. So if they have a certain package, you can't just upgrade that package. You must go buy a completely new package for yourself. In other words, you'll be double paying for cable, or what have you. And so you do have that. You do have, if you're in a condominium too, you have some insurance that covers the outside structure of the home, and then you have to pay obviously for your contents and and that's one of the biggest differences is the insurance, where they do have their master policies and things like that, which some of those condo dues go towards. But I just thought it was interesting. So a $100,000 condo, so your purchase price $100,000 with 5% down, with the $300 a month dues, your all-in price is about $928 a month. Okay, gotcha.
Okay, so that was a $100,000 condo. And that's when a lot of people are surprised when they add that $300 fee and their total is $928. Now, if we're looking at a single-family residence or a townhome, now most townhomes are probably going to have a small small HOA fee, but let's say there is no fee on a single-family residence.
This is not in a lot of places. I mean, a lot of places don't have them.
$145,000 is with 5% down, all in $930 a month.
So, in other words, to rephrase, the same monthly price, $930, can get me a $145,000 home.
$145,000 single family home.
Okay.
Or a $100,000 condo.
That I have monthly dues.
So your same monthly payment,
Gotcha there. Okay.
So that's a big difference. I mean, you're talking about $45,000 more that you're able to spend on a house.
And on the But there are those people that are going to tell you, but I don't have to do one thing we forgot was yard maintenance.
Yards, yep. You don't have to cut the grass.
You don't have to do any of that. You don't have to do weed control.
I don't have to take care of the pool.
No.
But I can use it. I can use it every day.
Absolutely. And I think that all those are big, but I didn't realize the buying power difference, though. Because certainly for $45,000, I can pay for a lot of those expenses.
Yeah, and you can really get into different house or... you're in a different price range. You're talking about 45%. You went $100,000 to $145,000.
You're a smart guy.
So
you had $145,100. Well, there you go. So there's that. So the other thing I think with condos is you got to be real careful on the loan type that you choose, right?
Yeah.
So FHA, VA, certain things you can't.
Yeah, they've actually got a list of FHA approved condos, which we have to search as soon as we get the contract. And then, any other
What do you mean by that? FHA approved?
That just means that they have filed paperwork, which there's questions that a condo answers. They submit budgets. They submit master policies for insurance. There's all kinds of paperwork associated with it.
And the reason being that they're in business, essentially, when you're a condo owner, you're in business with that association, right? I mean, essentially. In other words, the success or failure of the investment in your unit depends on the quality of that association doing what they say they're going to do. And that's why FHA is concerned about lending their money that way, correct?
Oh, certainly. And I think it goes along with, how many primary residents are there. Have the grounds been turned over to the HOA association? Are they managing everything? The investment units we talked about, the age of them, how many does, say, one individual owns. Let's say it's a small condo unit. There's only 10 units, but one person owns 4 of them.
Right.
Well, that's obviously going to be a problem, because what if that person has financial problems? Then you got 40% of the development in foreclosure.
Yeah, I didn't think
right?
about it.
So there's that. Then on the conventional side, we have condo questionnaires filled out up front, so we can get information back, the same type of information that FHA is looking for.
Absolutely. So ask these questions on the front end. I can tell you just from my experience dealing with you guys, if you will, the mortgage industry, is that unlike a single family home where we can rush certain things, sometimes there's no rush in this condo stuff.
Yeah, because you're a lot of times you're waiting on the other parties,
the
right?
property manager or the association manager, those type things,
yes,
right?
For information.
Absolutely. All right, moving on to stock market today. Over the last few days, all over the place, man. I mean, up 300 or so today, but down 500 yesterday.
Yeah, so it's been it's been a lot of up and down. I think there's a lot of concern about interest rates moving up. There's concern about the trade wars with China. So there's a lot of movement, but think about, we're kind of flat on the year, right? So in 2017, we went from 20,000 on the Dow to 25,000. And now today, I think we closed up 300 or 400 points, but we're still at 25,000. So we're flat. I think these are not issues related directly with each individual company.
Oh, of course not. I mean, we saw it today with earnings, right? We saw some Microsoft, killing it on earnings, and Tesla, and then Amazon comes out and really blew it on earnings.
Yeah, so Amazon's going to bring down the whole market.
Absolutely.
Right? Because Amazon's going to be an indicator of maybe other issues.
And you and I talked about the idea that a lot of these companies, we're going to see individual movements over this next 2-month period where we're going to have good days and we're going to have bad days. I mean, just like, hey, Taylor Arnette, if you're still with us, thanks a lot for Snapchat. You and your friends are not using it as much. And we continued the loss today, right? Because not as many users are using it, and they've never made money, so it wasn't an idea of earnings.
Yeah, they're not making any money.
But really, the best advice that I can tell you is do what I'm doing. I mean, obviously, that's the best advice. Do whatever this guy says. No, I mean, of course, great idea, but is just to stay the course.
Yeah, you want to stay the course. You don't want to sell a good company because they're down for market reasons.
I mean, honest to golly, if you look, I looked before I came in here, and I'm almost back to where I started the year, right? Well, that's a pretty good I mean, I haven't lost, so that's good. And so I think I'm now invested in good, solid companies that make money. And I think if I have a 5, 10, 15, 20-year window, I'm going to be fine.
Yeah.
But
you got to ride it out.
And I will say this, you got to give yourself a little play money because you'll be consumed by the idea of what ifs. So, play the Snapchats, play them, but just put a little bit out there, and don't play these penny stocks or any of that.
And the best thing to do when you see these big swings down is just to buy more of companies that you love, companies that you trust and are doing good.
Dropbox and Royal Caribbean. No, 2 of them that I think are coming in. Now, to everybody's favorite, the football picks. Man, last week, average week. We went about 500.
The worst of the week, they do this on Jocks, right? Best and worst. The worst of the week, and I didn't even watch football last weekend, but was Auburn beating up on Ole Miss. All right, so this is what it tells me. It tells me that you had the team to win games earlier in the season and you didn't win them. So whose problem is that?
Coach.
Usually. Now, you got a Jatavius Whitlow.
Booby.
Who goes off for 170 yards? Are you kidding me?
Yeah, man, he's a good player. I mean, his mama.
He's been there all year.
Yeah, well, he's been hurt a little bit.
A little bit,
yeah. Well, I tell you, hey, the Alabama.
It's football. Everybody's hurt every week.
The best team in Alabama, other than the Crimson Tide, is UAB. And that coach has done what a job he's done with that team. I mean, coming really from scratch again. We've been over that before. But look, they got UTEP this week. They will go to 7-1 of all things. They're going bowling again, and they will blow UTEP out. I mean, I think they're 30-point favorites.
Killing
crazy.
UTEP, huh?
Yeah, absolutely.
Then we got Purdue, 4-3, plus 1.5 at Michigan State.
All right, what's your pick?
They just beat Ohio State, right?
Yep.
That's the end of their season. Michigan State's going to win that one.
Nope. Purdue's was this. Michigan State's not that good, folks. Not good. They only put 7 up against Michigan. This one's at Purdue. Purdue's not bad. Although, let me tell you, did you watch the story of the kid with cancer, Tyler, whatever his name was? I mean, Purdue they were playing for a kid with cancer, right? There wasn't anybody coming in. Alabama would have lost. I mean, it was that big of a deal, right? That everybody, when you have that 100% buy-in, I mean, it was just going to be willed to be, right?
Wow.
And,
great story there then.
Yeah, I mean,
I didn't know that. No.
What was great, I hate ESPN as a company, right? It turned into a liberal rag, but they actually, let this kid be a co-host of SportsCenter. I thought that was nice too, because he only has days left, and they let him co-host from his bed.
Yeah, how can you hate ESPN? I mean, they're the leader in sports.
All they want to talk about is politics. That's true.
We don't get any politics on ESPN. I don't know. Clemson -17 at Florida State.
Absolutely. The wrong team is picked here. Florida State is going to keep it within the 17. They've never, ever, I believe the stat is over double digits at Doak Campbell. Clemson hasn't. And so this is Florida State with the points.
UAB 6-1, CBS Sports, Dennis Dodd. Yeah, number 24.
Well,
there we go.
Hey, you know what's funny? I don't know if you noticed this. When Purdue is beating Ohio State during the game, right? I went to Twitter to see what everybody's talking about. In typical fashion, all the Auburn fans, including myself, that is an Auburn fan, so I'll say it. But it was just fun watching everybody on Twitter talking about, we need that guy. Like, we've seen him coach one game, and all of a sudden, he's the best coach in America, right? He is a good coach, I think.
Let me remind you about Coach of the Year, Gene Chizik.
Chizik. Well, he's a better broadcaster. Although, how dumb are these guys? They're not very dumb because they're all getting paid for like 10 years after they leave, right? Millions of dollars.
Oh, no. The coaching profession, they're making a ton of money. They're doing great.
Well, here's the next one. That's a trap game. Trap City, Kentucky at Missouri. Kentucky is a 7-point underdog.
7-point underdog. And they've been doing pretty good this year.
They've been doing good, but let me tell you something.
They're going to win.
They're not going to win. Missouri can score. Kentucky cannot pass. They don't win because they can't score enough.
They can't outscore them.
Well, that's my opinion. But you know my opinion. I'm right some weeks and very wrong on others.
Yeah.
So
Texas A&M +2 at Mississippi State.
Isn't this interesting? Because Mississippi State's quarterback is so good.
Nick Fitzgerald.
Yeah, I mean, this guy, 6'2"?
Yeah, he's running the ball. He runs the ball a lot. He calls his own number many plays.
I know where you're headed with this,
Tough
and I'm
dude.
with you. A&M is going to win this game outright. Don't need the 2 points.
I like Jimbo down at Texas A&M. So yeah, we'll go with them. Florida
right.
+6.5 versus Georgia. The cocktail party in Jacksonville. Georgia's upset, aren't they?
Hey, you know why this is David's favorite game of the year? It's the cocktail party.
That's right. And so Georgia just lost, coming off a loss, right? Who'd they lose to? LSU?
Yep.
So
bad too, right?
I think this is
6.5 points, by the way.
I think Florida's been doing well this year. Who's down there? Who's the coach down there?
Florida McElwain?
No, just left. Didn't he just come from Mississippi State?
Oh, yeah. Dan.
Dan, yeah, that guy.
Dan.
I think he gets it done.
Yeah. Well, you do.
Let's go with Florida.
Not so fast, my friend.
You got to pull Georgia.
Hey, go Dogs.
In Jacksonville.
Go Dogs. They're used to it. The fans, what's really neat about this game is it's split 50-50.
Yeah, so it'll be a neutral
I don't think
site.
the fans care who wins. They're just going to have a good time.
Yeah, they're going to have a great time.
I mean, that's one of the best things about Florida, but and that rivalry.
Mitchell saying UAB's going to be
having a showdown,
squaring up with Texas A&M in a few weeks, huh?
I didn't know they were playing. Wow, that'll be interesting. Although I would not want to be UAB that week, but at least they have nothing to lose.
That's going to be a tough game.
We know who Mitchell Miller's pulling for, right?
Yep. And they might show up and have a better attitude than A&M.
One of the great things about Mitchell Miller is he is a honest UAB fan. He'll tell you when they suck, so that's great. Anyway, wanted to tell you a little bit. Don't forget to share the show if you're watching this, especially on the replay. Share the show on Facebook, wherever you're seeing it. Another big news. This is also being released every week as a podcast. It's up right now on Apple iTunes, Google Podcasts, Spotify, TuneIn Radio, Stitcher, wherever you can find us. Because, hey, as David likes to say,
we're kind of a big deal.
So
up next will be the iHeartRadio Awards for podcasts, right?
Yeah. We got about
if they create a new group just for us, then we'll win.
Absolutely. 1 out of 1.
Yes.
We're winners. But anyway, iHeartRadio will be releasing to iHeartRadio in December. So really excited to join the iHeartRadio platform. And head on over to the Real Estate Happy Hour Facebook page if you haven't already and hit that like button.
And we'll be back next week, Thursday at 4 o'clock. So we'll see you then.
All right. Y'all have a great week. See you next week. Bye-bye.